Do you trust your crypto assets to centralized exchanges that actively sell your private information and front run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.
Okay, remember when we used to do it where, for those of you that remember, where for the office hours, if by the end of the video we don't have as many likes as we had people in the beginning of the video, I nuked the video. This is the pay it forward thing. So we're going to do that again. So we have 97 eyeballs. This means there's 97 people. You're never going to get 100% of anything. So I will say, if at the end of this video, we don't have 90 likes, 90, I'm nuking the video. Good for you guys, bad for everyone else. I'll let you decide. What is it they say in the, may the something be with you or whatever in the, not the Force, but like in Hunger Games? Some old thing. Anyway, ooh, it's 103. God, man, when we first started these videos, like in 2019 or something like that, it was like me, Jerry, Nara. I had my buddy Steve, played Hall of Famer, by the way, for the LA Raiders. Steve Wisniewski. It was like 8 of us for like months. Then we had our buddy Lance. He worked at a hospital, although he got mad at me because I crapped all over XRP at some point, and he was like, I won't be a part of this, or something. I don't know what it was. It was so funny. That's when people got mad at finance. They're like, I'm mad at finance. I probably cost Lance a lot of money. I don't know if he got out of crypto or whatever. I hope he stayed in it. Anyway, yeah, but that was the deal. We had to at least have as many likes as people. Otherwise, I would nuke the videos because I cussed a lot. I don't think I cussed more. I have to go back. Oh, yeah. Then I actually did a video about Ripple. And this is when YouTube was hating on Ripple and XRP. Ripple, the company, XRP, the token. And when I did the video explaining something that had happened in the market, they nuked the account. They like froze the account and they said violation. And I was like, what? Violation? They're like giving investment advice or some crap like that. Anyway, they nuked the account because I had Ripple in the title. Don't put Ripple in the title because it will shut your stuff down. Anyway, yeah, so that was the thing. You can't like it if you're on the website. Well, Jim, the rules are the rules, buddy. You got 100. The rule is 90. We don't get 90 likes. I'm nuking this shit. How about that? There. Now I cuss. Now I can blame it on the profanity. Let's see. Let the odds be forever in your favor. Yes, Philip with the win. I like that avatar, by the way. Is that a GPT-4 created avatar? So good. Now, like the way I used to fish for memes while I'm chatting with someone, if I chat with someone and they come up with something cool while I'm having a text conversation, I'll go to Chat GPT, open up 4, go to Dolly 3, bang out a picture, send it like almost in real time. So dope. It takes about 15, 20 seconds, but I mean, let's see. So we have some, we'll get to our housekeeping in a second once I get through everybody's stuff. Let's see, it paid $7 for your Patreon. Why? Oh, you mean back in the day? Yeah. We had a Patreon. By the way, I didn't take any of that money. Just so you guys know. I'm trying to think what we did with that. I think the Patreon earned $800. I don't know. I don't know exactly what it did. We bought something for Jerry. I feel like we bought him a microphone or something because he had like a crap mic. They had a good mic. His microphone was better than mine. And I had microphone envy. Let's see. When is the correction coming? Well, we're not in a bull market yet. Don't get caught up in the hype. Again, I'm not going to go into market stuff so much today. I am going to talk about an article I read. There's a bunch of Bitcoin ETFs on the horizon here in the next couple of weeks. Not sure if they'll get through now or if they'll get through by that January 10th deadline. But within now and January 10th, you're going to get a Bitcoin spot ETF. Gary Gensler got his ass handed to him yesterday by Tom Emmer. Have you heard that? Dude, Emmer shit all over Gary Gensler. I mean, like, to the point of passing something through the House where they're gonna shut him down. They're going to restrain what the SEC can do under Gensler's lead until there's some legal framework for digital assets. I mean, he shut his ass down. It was awesome. It's like 4 minutes of him just, ugh. I didn't feel bad for Gensler, but it was a little bit of comeuppance. Comeuppance? Put downance? Whatever the opposite of he got his cake and rubbed all over his face. That's what it was. Anyway, okay. The more I see you and Tufi, you kind of look alike. Yeah. I mean, I've got the cool glasses. He uses the thicker ones. But yeah, Tufi and I are very close. A lot of people do. Well, some people know that. Tufi and I and a small handful of people are very close, like where we talk about every day or communicate every day about things and goings-ons in the crypto space. Although those guys, he and Dan and Barry and all those guys are on another level intellectually than I am. I'm in a kind of a different place. I'm more in the human-y, finance-y. I also talk to Mario a lot over at Singularity DAO. Mario's a good friend of mine. That whole crew, I'm pretty close with. I just don't share a lot of stuff because a lot of stuff they say is not stuff I can share. But you know, it's a lot of stuff. There's a lot of stuff coming in Hypercycle. There's a whole shitload of stuff coming in Hypercycle. Oh, I can't talk about it. But I can say that. I can make an announcement of a maybe announcement. There will be I'm trying to think. You guys know about the international AI copyright organization that's being formed as an NGO. We talked about that on this week in Hypercycle with Tufi. He talked about it. That's a December 9th thing. There's another thing that may be right around there that's a big one, but they're not 100% sure they can talk about it. But it's a big one. It's as big, I think, as that. So we'll see. And then there's a couple of compute clients that they are onboarding even now, going through those early stages of onboarding. So we'll see what that, all that does. It's interesting. What's also funny? We do all of the This Week in Hypercycle shows, and very few of the Hypercycle community actually come over and watch these shows. And you know how you know? Because these morons, I don't mean not any specific, but just in general, morons selling Hypercycle on DEXs, and they get their asses kicked. People all day long sell on Node Market. You're getting $1, You're getting 97 cents. You're getting $1.05. You're getting $1.10. There was a sale yesterday for like $1.12. And people are getting 88 cents on the dexes like dummies. Like, what's wrong with people? Do you guys want to give away your money? They're so prideful. They're like, we're not going to use node market. There's a certain group in there that's like, whatever. They're like, no. I'm like, okay, you want to be made poor on pride? That's some stupid shit. Look, man, it doesn't matter if I have to deal with the Dark Lord Satan. If he's got a badass exchange and I can get money with no slip, if I can change currency for no slippage, then, Beelzebub for the win. Like, I don't care, bro. And none of you here should care either. Anybody that can hear me, like, you guys got to do whatever's best for you. It's just that there's not another place. We built Node Market because there's no other way to get shit done. Like, you guys you have to, as a competent fiduciary, you have to go where you can make the best swaps, where you can do the most with your currency units. Think about all the trouble people go through to stake this, stake that, to get 6-7%. I want to stake my tokens for 7%. Cardano, stake them 7%. I want to stake Ethereum 5%. Stake all this kind of thing. People moving all their shit around. And then you're going to give up 12-15% on one trade on a DEX like a dummy because you're prideful. That's some stupid crap. Pride, man. Pride gets in the way of people. I don't have any pride when it comes to money. I give zero craps. I'll use, if I don't care if I absolutely hate some individual, as long as I trust them. I'm not going to go to an exchange that's going to steal my stuff. But like, come on, bro. That's why we're building this OTC, because something like this is probably the future of what exchanges look like. It's not going to be trusting some central authority to hold your shit. That is stupid. That's why we got into digital assets in the first place, because we don't trust banks. I'm uncomfortable right now. I have some money sitting in a bank waiting to do a deal on a house that doesn't look like it's going to happen because people are lying garbage in the real estate industry. And so it looks like that's on the back burner. So you know what I'm going to do? I'm going to take all that money. I'm going to push it right back to Coinbase. I'm going to park it in USDC. I'm going to get paid 5% to chill. Like, I have money in bank account. I'm uncomfortable about it. And that's a bank. And that's Chase. Like a real bank. Like, that's why we left. So this idea that you would let middlemen, mediators, centralized third parties hold all of your stuff, it's asinine. And it's the same thing with an exchange. I'm not thrilled with having money at Coinbase. It's theirs because it's one step away from being cash. But there's a certain point where I'm just going to convert all that stuff to Bitcoin, punt it over into Ledger X, and start trading it, trade options around it. Again, we're only a few K away now that Bitcoin's pulled a runner in the last few days. So we'll talk about that a little bit. We're going to talk about making your money your employees. That's going to be like our brain experiment today. It's kind of a cool one. I'm going to go over it's going to be less vague. So sometimes I do these and they're very vague, very 10,000 foot. This is going to be like right in the middle. We're going to be at 5,000 feet today. That'll be fun. Okay. Let's see. But you do not have access to the like button. Yes. Well, that's not my problem. Listen, you understand the rules. The rules are we need 90 likes. Everything beyond that are not rules. You have the rules. You now understand the incentivized system. The mechanism design is we need 90 or I nuke the video. That is that. But you know what? It's free anyway. It's like, don't stress, bro. Okay. Let's see. Let me go to, the Ethereum network is a absolute dumpster fire shit show. If anybody doesn't see that Ethereum has systemic problems, doesn't this make it so effing clear? A transaction that should cost you 2 cents costs you $18 right now. Like it's beyond obvious that Ethereum has problems. The price goes up, people start using it. There's nothing magic about today. There's no NFT launch. It's stupid. This is the fee paradox. Okay. Arlen asks, can you discuss what the issues were with the Rejuve token? Well, what they're doing is they're going to sunset the Binance contract, I believe, and they're going to just launch one token that represents Binance and the Ethereum token. Again, the Rejuve token doesn't even need to exist. It's stupid in the first place, but let's get past that. So what they did is they froze rewards for now. They're going to migrate. They're going to have a migrate. You'll be able to do it right there on Singularity DAO. You'll be able to push your tokens through some bridge to the new token. And they're going to, Mario and his team at Singularity DAO are going to handle all that. It's going to be perfect. If it looks like it's unfinished and clunky right now, that's because it's unfinished and clunky right now. It'll be, they do stuff well at Singularity DAO. That will be clean and easy, so don't stress about it. You'll have plenty of time to do it. They're just not paying rewards because they're issuing a new token against that. So there's going to be a new Rejuve token, which I think will be just another Ethereum token, but new one. Yes. Okay. Let's see. Bam. Bam. Let's see. If you don't get 90 likes, then make it private. Ooh, yeah. I could do that. I could leave it for the digital investors. I have to ask Brandon how we do that. Like how we make it. Well, I can always do this. I can nuke the video public facing, make it. Yeah, we'll do that. The digital investors will get to keep it, but everybody else will go away. Okay. Hair using AI. Yeah, I know. I need more hair. I don't have much hair right now. Yeah, and you can, by the way, you can always check gas prices on Node Market. Look at it right now. 296. Are you kidding me? What a kick in the nuts. Oof. In the philosophical version of nuts. Do I post? Yeah, but they go away. I nuke all of them. So if I nuke a video, I go to StreamYard and I go delete broadcast, delete broadcast, delete broadcast. And so all that's left is like a little thing that says there used to be a broadcast here. All right. Let's see. The ETF story is playing out. May prevent the kind of market correction you're hearing from everyone. DCA. Yeah, I don't think there's going to be a big correction. I just don't think we're in a bull market. Does that make sense? Real quick, 436 digital investors. The number goes up and down because we have like monthly payments that sometimes, whatever, doesn't matter. Anyway, private clients 54. So we're over halfway there. 1,213, as you can see, NFTs. That means everybody that was not in by the 6th is in the 21% rev share bracket, which is still not terrible. Great. No, it actually, Sam, the sales for Hypercycle were very minimal. But on a DEX, I'll show you, when you're on a DEX, a few people selling can nuke the price, and that's what you got. Okay, got it. Here, look. Come on, man. Look at these. These are very small. None of these are big orders. 8, 1,900, 6,300, 50. All of this crap. We see red. All this stuff. Go down. There's not one big order on here. 5,000, 2,000. This is all weak ass. No offense if you're just selling 1 or 2,000, but these are weak. Just low. Ooh, 8,000. Ooh, these are tiny orders, right? As you go, okay, well, that's that 92, 93 cents. Okay, cool. Go here to the exchange. Let's look at Hypercycle. Been 240 volume. That's not bad. Just 21 ETH trade. So about 50K traded over the last day or two. Go to the last sales. Okay. Hypercycle, $1.19, basically $1.20, $1.03, 97 cents, 97 cents, 98 cents, 96.5, $1.03, $1.02, $1.02, $1.03. Why the fuck would anybody, yes, not pardoning my French, why the fuck would anybody use a DEX when they can get paid 10% more by listing on an OTC wallet to wallet? It doesn't make any sense. This is how you know people are stupid and prideful. Right? And what's happening is in the Ethereum network, when you have a lot of people doing transactions, the GUI just goes, it skyrockets because Ethereum has a problem where the fees, whenever there's any network congestion, the whole thing becomes a botched mess. And because the price of the token is higher, the fees are higher and they feed on each other. And it just becomes a damn nightmare. But Sam, no additional. There hasn't been a glut of hypercycle for sale. Matter of fact, it's actually been very anemic. It's just that people are stupid and they're listing, and it is what it is. They become rookies when they want to sell something. There may have been a 30, but that's tiny also, John. You can't listen. Real quick, pop quiz. How many hypercycle tokens does it take to fill one masternode? Which you can get for like 46K. Let's see what you guys know. Let's see what you got. Let's see some answers here, fellas, ladies and fellas. No. That's per one node. That's one node. Yes, you got it right. Now multiply it by 512. Let's see. Yes. First, no, Frank nailed it. Frank, Joe, 524,288. 524. You guys need to know this. 524,288. 524,288. That needs to be just in the back of your mind. 524,288. Matter of fact, there's a couple here, people that I've seen that actually have master nodes. 524,288. You can't complete that sale. If you want to buy right now 524,288 hypercycle tokens, you can't on a DEX. Not possible. I'm telling you this. People are like, no, the price impact is over. It's like 200%, meaning it just won't happen. It'll be failed transactions. You'll get partial fills and failed transactions. It's like the worst kind of market order you could ever imagine. You won't get filled. There's no chance. So I think we looked the other day, was it 2 days ago, that filling a master node would cost you over a million. So just about, I think it was like $1.96 a token versus go to an OTC. I'd say go to another one, but there is not another one. There's not a place. I don't know why this wasn't built by Singularity Net 3 years ago. Why is there not an OTC market? Well, I mean, there is now, but like, why wasn't there? This is common sense. We were asking around, and I was talking to Tufi. I was like, why is there not an OTC for all this stuff? And he's like, I don't know. I'm like, okay, we'll build it. Like, let me talk to Brandon. This is months ago. And we were like, well, okay, we built it. And this is a tool that we were like, well, we need it. We're going to build it because we need it. And essentially, we built this around the concept of, at first we thought, well, we need an OTC for the tokens, but we also need some way for people to sell node licenses that are in production, not just the original ones, which we do that, but the node licenses once they're working, which becomes like its own little business, and maybe not so little. You guys do some math about, 5, 6, 8, 10 splits. It doesn't really matter what the world looks like 2-3 years from now. It's going to look a lot different for people that have licenses that have split 4 or 5 times. And I mean, can you imagine? Jesus, look at people that got early rich in Google that had stock splits. Split rich, done, retired. One of my friends, he's a dumbass, but his dad was early Google exec, got tons of shares, tons of splits, done. They're rich. That's the end of it. And he can squander, and he does on a regular basis. He squanders money like a dummy. Try to help him, but he ain't trying to hear it. Man, rich people don't want to learn about finance. That's the thing. You almost have to grind your way up, because people that have tons of money, they don't really feel like it's worth it to learn anything new. And I think those people should all be panicking into AI, panicking into new, at least the learning part. It's weird. Anyway, okay, so let's not talk about that so much. We'll get into our educational part. Let's spend a few minutes. I want to talk about 2 things. One, let me see. I guess technically, this is kind of new. It's crypto news. We don't have a thing for crypto news. I try to get one, but Brandon's too lazy. I say that because he's not here to defend himself. He's in Mexico. Let's do a real quick, like 2-minute market update. And along that, I'll talk to you about Bitcoin, and I'll talk to you about Graph token. So the Bitcoin, is that right? I feel like that's not right. Maybe it is. Maybe it came back down. Let's go back. Oh, God. I did it again. Okay, so it must have. Oh, yeah. Okay, so people are taking a little bit of profit. So you see it was just shy of 38,000, like, minutes ago. So it's come back down. People, there's a little profit taking there. Some people with some leverage. And let me do something real quick. Let me go here. Let me, you know what? Nah, it doesn't matter. We can just do it right here. Anyway, so let me talk to you a little bit about the crypto news as we have it. So essentially, and we're going to talk about Graph also, but there's 12 Bitcoin ETFs that could be approved in the coming days. And essentially, again, we're at one of these deadlines where the SEC is on the brink of a decision. And it is, this short window has opened up. It starts from November 9th, during which the SEC could potentially, and I'm going to guess after yesterday's shit show with Tom Emmer just dressing down the SEC, I'm going to guess that Gensler is going to be like, F you, I'm doing nothing. You can pry me out of this seat behind my desk, whatever. So I don't think he's in the making things happen mood, but the SEC potentially could approve all 12 of the pending Bitcoin ETF applications. I think they'll punt them one more time and Bitcoin's going to come back down. But again, it only touched 36 yesterday and then almost touched 38 this morning. So like, this is just, it's wacky, but it is what it is. So there are 12 Bitcoin ETF applications currently pending. It includes Grayscale's application to turn their GBTC from a trust into a spot ETF. But I would say the January 10th deadline makes a little bit more sense. Grayscale's application has been under scrutiny following the court ruling that you guys remember, where the SEC had initially denied Grayscale's application. A U.S. federal court found the rejection to be, and you've heard this 100 times, both arbitrary and capricious, and they ordered the SEC to reconsider. Since then, Grayscale has been in constructive discussions with the SEC, suggesting that the eventual approval of the ETF is likely. I think that is true. I just don't think it is true now, this second now. So essentially, there is a hypothetical possibility that this week the ETFs could push through. We'll see. There's still a bunch of filings that would need to occur, and the government would need to basically step out of the way. But anyway, yeah. So that's kind of what's going on with the Bitcoin, which has done pretty well, but it's correcting right now. Okay, let's go down to Graph. Let's talk about that for a second. If we can go find that sucker. Well, let's just go look at it. The Graph. All right. It's been having a pretty good day. Ooh, look at that. It got up to almost 14 cents, and then it kind of followed the rest of the market where it dropped down to 12. So about a penny and a half. But the point is, you're going to see this kind of behavior a lot. It's got okay volume. Anyway, Graph is the king of, used to do some cool stuff. All the gurus got on the train like, oh my God, this is the greatest. This is going to make you rich. All this kind of crap. They all jumped on board, the Tika Tuwaris and all the other D-bags. And you're seeing this a lot in these companies that pivot. Now we're AI. Okay, man, we saw with Render. Oh, we're AI. Oh, now not only are we Render, but we're also we're AI. Oh, we're distributed compute. Oh, we're working with Solana. Like all the bullshitty things. Anything that's interesting, Render will say that they're now pivoting in that direction. So this is another AI pivot. It's a little bit like Johnny come lately, but anyway, the Graph unveils their new era roadmap with more AI assisted querying. ... So, the Graph is a blockchain data indexing protocol. So their new era is called, cleverly, New Era. Which, come on, man, like. If they, what's funny is if they had AI write their articles, they wouldn't be this like kind of creepy, but I don't know, creepy, just kind of weak. Anyway, the graph, they claiming to be a leading protocol for indexing and querying data stored on blockchains, has unveiled a new game-changing set of features called the New Era Roadmap. These enhancements mark a significant milestone for the project following a successful $50 million fundraising campaign in the previous year. Kind of makes you think, like, did they not keep any of their own token to slowly fund for business operations? Did they run out of runway? Why is a company like this going and raising money when they have a $1.2 billion total market cap? Like, you just got to wonder about what's going on the governance side of these things. Like, oh, you're worth 1.2 billion. Yes. Why do you need my money? Well, because we ran out of money. But you're worth $1 billion. Yes. So where's the money? Like, how's 50 million going to help you if you have a market cap of 1.25 billion and you have no money? We need it. We're broke. So, like, come on, man. Anyway, among the key highlights of their New Era roadmap is the integration of AI assisted querying. Again, I think this is a company that becomes a feature. There's nothing that they do that I think is all that interesting anymore. That, I don't know, man. It just seems like these are features. This seems like this whole company is a feature it'll just be AI features. Anyway, among the key highlights of this roadmap are the integration of AI assisted querying, yawn, using large language and large multimodal models, also yawn because everyone's doing it, promising to revolutionize data accessibility for Web3. It's good. People will probably invest in it. So, we'll see. Let's see. Graph experienced a surge in whale activity and significant influx of new addresses. That part's good. According to on-chain analytics firm Santiment, this surge in activity is reminiscent of levels not seen since February. The recent price surge graph reaching highs of 15.8 cents. Well, yeah, not right now. On November 6th, has been accompanied by a flurry of large transactions and the creation of 620 new addresses, which that's not so great. That's not like knocking it out of the park. I think Bitcoin gets like 10,000 new addresses a day. So like 600 is not so amazing. The graph's reputation as the Google of Web3, that's a reputation they gave themselves. That is not a real reputation. That's like, I can't call myself like the Studmeister, like Nick, the Studmeister. They're like, that's not a thing. You can't give yourself a name. I can't say I'm the Google of like YouTube. One, that doesn't mean shit because Google owns YouTube. But anyway, like, you can't give yourself a thing. The Google of Web3. Bullshit. They're the Google of nothing. They're the Google of giving themselves name of Google. Like, come on, bro. They are great at indexing, so that's cool. But again, these are all buttons and features that AI is going to accomplish. If you can describe it, AI will do it. I don't know. These companies are just they're grasping for straws. When am I selling Graph? Whenever I say that to the digital private clients and digital investors, and not ever on a public show. But nice try, John. With the latest development, the Graph aims to further solidify its position as a pivotal player in the blockchain ecosystem. What a pivotal player. Let's see. The director at the Graph Foundation expressed her excitement about the future of Web3 data. That is true. I'm with her on that. She is quoted as saying, I'm not going to use girl voice, but incredible innovations, because she might have like a really low voice and then come after me. Anyway, incredible innovations are being worked on that will fundamentally change how people interact with Web3 data. Yeah, it's called artificial intelligence, dummy. Like, you're not doing it. No one at Graph is doing it. OpenAI is doing it. Microsoft is doing it. Google is doing it. The Google of Web3, the self-proclaimed, is not doing it. You're just leveraging large multimodal and large, like, they're just leveraging AI tools. They're just plugging into, it's so, anyway. These innovations, as outlined in their New Era roadmap, are set to usher in a new era of possibilities for blockchain technology. Well, good job working in your dumb name into a dumb description. Anyway, AI-assisted querying, they call it a game-changing, a game changer for Web3 developers. Problem is, Web3 developers are being replaced by code. software designers, software coders are being replaced by engineers, which are being, leveraging LMMs and things like that. So, I mean, just how long before none of this exists and it's all just automated where you and I can do it and we don't need, they're just plumbing, man. They're just plumbing in the middle of new companies coming in to replace the plumbing. So it's like I don't know. This seems pretty obvious to me. I don't know if graph exists in any meaningful way 3 years from now. It's just going to be all gone. Now, it doesn't mean that in a bull market, the price is not going to do amazing, because listen, as the water level rises, all the boats rise. So from a non-financial standpoint, this is a company that just doesn't need to exist anymore. It's just going to be obsoleted by tech, by code written by robots. So like, I get it. Like, it's cool. They have a new roadmap, but this is panic mode. If I'm looking at this company, to me, this is panic mode. This is, oh shit, we're about to not exist. Panic mode. But anyway, cutting edge technology will empower developers. Who's developing anymore? Nobody, because they're being replaced also, man. Engineers, they stay because engineers think of new ideas. But software devs, that's over with. That shit is over with. Anyway, greatly reducing the technical barriers to entry for blockchain development. They're already not there, man. AI-assisted querying leverages the power of large language models and large multimodal models, which can understand and process human language inputs. Yeah, hashtag duh. By enabling developers to interact with blockchain data in a more intuitive and user-friendly way. No, developers are going away. What you need to be doing is getting out of the way and letting AI just take all your stuff and run with it. I know it sounds bad, but in a few years, it's going to be, people are just going to look back like, well, this is obvious. Like, this is obvious the way. He recommended optimism. Tika did. He's such a piece of shit. No, that's good, because he has a lot of people that blindly follow him. And optimism is a great project. And optimism is in a great space. When you see how stupid the Ethereum market is right now, when prices go nuts, I'm done talking about, I'm not going to read all their propaganda bullshit. Great. Graph unveils a new era, a bunch of spammy, very timely bullshit. Good for them. Great. Awesome. Okay. Oof, look at that. Bitcoin coming all the way back down. Oh God. XRP got just punched in the nuts. Yeah, this is actually, when I see things going up stupid, I'm uncomfortable about it. So this is for me, this is better. I don't like, and for many of you that are still kind of working your way into various investments and things like that, you probably feel uncomfortable when markets go straight up as well. So yeah. All right. Optimism is a good play. Just so you guys know, optimism, I'm not telling anyone to buy it or sell it. I'm just telling you that when you see Ethereum being stupid like this, optimism makes a lot of sense, right? It just makes a lot more sense. Yeah. So anyway, there you go. What's the GUI at? 156. You see all this crap and you realize, God, how much easier it would be on a platform or on a protocol that wasn't, even if it's a layer 2, even if it's just, and this is the whole thing too. If layer 2s are successful, why Ethereum? That's the whole Ethereum is money was started by a few people that are early investors, the Novogratz, the Rao Pals, the idiots out there idiots. They have a lot of money, but that's only because they fleeced early investors into their funds. They themselves have not made themselves money other than being early to Ethereum. That's it. Just being early to Ethereum. That's how they made their money. And a couple of other projects. And good on them. I'm not hating on the money they made, but these are not thought leaders. Tika is not a thought leader. Tika is a marketer. Good for him. He makes tons of money marketing. Tika doesn't own crypto. Matter of fact, I don't think legally they can. I don't even think they can own the things that they talk about. So be careful that you're not confusing like info for marketing, because mostly that's what you're getting. Most of these people that run funds, they are marketers. There's actually a really nasty book that came out about Ray Dalio and what's going on over at Bridgewater, and how nasty that place is. I don't like books for the most part. I'll probably just go through and have that summarized for me and read back to me by GPT-4 Turbo. But Charles is saying DOT is the Ethereum 2.0. What does that make Cardano? Yeah, I mean, look, in a bull run, everything moves. Ethereum, Bitcoin, Solana, they're probably going to all go up until they start crashing. And then you'll be like, ah, shit. Or until, FTX starts having to forcefully sell assets, which they are, in order to, come on. They're going through a giant bankruptcy. Like, what do you think they're going to do with their assets to make investors whole? They're going to sell them. So what happens when they sell millions and millions and millions of Solana? Oh, goes the other way. Yeah, because microeconomics. Come on, bro. Yeah. Oh, God, there's a lot. Anyway, just be very careful. Be very careful that you're not getting sold, that you're not getting marketed. And if you are, just understand that, because there's a lot of marketing going on. So yeah. Okay. Today we're going to switch gears a little bit. We're going to talk about, there's a couple of things, but I guess if I was to summarize, I would say we're going to talk about making your money into your employees. I'm going to say making your, I talk about this a little bit. Let's say currency units. I don't know if it's specifically money. Making your currency units into your employees. That sounds like a fun thing to talk about. We should do so. So I'm going to go here. Boop. I'm going to go here. Let me get my little, I love this class in sessions. It's so good.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay. Let's get some nice kind of chilled background music. Okay. So put your thinking caps on, forget about money for a second, even though we're going to talk about money. Raul Pal, he's such a piece of shit. That guy is, so just a real quick anecdotal story. They were interviewing me to work for Real Vision a while back. And he said, get on the our social platform and like build up your reputation. Of course, I found a way to game it. So I built my reputation up to like being one of the top 2 or 3. And I noticed that one of the dudes that was involved in Real Vision, who was a co-founder of Real Vision, was pushing a project that I knew was a scam. And so I pointed this out quietly, and they got mad at me. I was like, wait a minute, I didn't do this publicly. You want me to do it publicly you want me to do it where everybody can see it? Or do you want me to keep it quiet? Like, I went to them privately. I went to Raul directly, message to message. I said, hey, this is a scam. You need to either put out a statement or separate yourself from this guy. He's like, oh, that guy's not involved with us. I'm like, well, he has Real Vision co-founder on his name. Real Vision co-founder. So to me, seems like he's one of you. Oh, well, we don't talk about his investments. I said, well, he's pushing it as if he is you, as if he's you guys. Turns out Raul owns some. They all own some. It was a big fucking scam. And it was a, I'm not going to say the name of the company because I'm sure they're in some kind of litigation, but it was a crypto insurance product or some crap. And of course it got pilfered. The whole thing was a racket. And then they kicked me off the platform and were no longer interested in my employment. It's so ridiculous. I'm like, you guys are such idiots. Marketer's going to market. He's a marketer. Raul is now Raul's not an idiot. This is the thing. Raul himself is not an idiot, and he's not he's not a thief. He's a marketer. He's marketing his platform. And for that, I want, again, success to everyone. I don't want anyone to lose money. This is not a zero-sum game where I have to lose in order for someone else to win. It doesn't work that way. You have markets. Some people are on their way out. Some people are on their way in. It is what it is. But that being said, when you know that you're doing something that's all about marketing and very little, it starts to become borderline suspect. He was absolutely a part of that scam. He was absolutely a part of Terra Luna. He was promoting it while it was disintegrating. when it unpegged. He was live. They erased the video. There's tons of clips of it though on Twitter and stuff. So, and it was just he's become a pure marketer. He has he's a smart guy when it comes to macro. He has no fucking clue what goes on in the crypto space. He completely misses it. He just has no idea. And so he's just a shill now for Solana and some other stuff. When he was pumping Bitcoin, he was telling everyone he didn't have it. That means he did have it. He sold into the excitement and continued, like Charlie Lee, to talk it up even after he was out of it, which is fine, but tell people that, right? Like if you sell all your stuff, tell people you sold all your stuff, right? At least Charlie Lee had the decency after he got caught to come clean. So, okay, that's my little spiel on that. Let's get back to class because there's going to always be various degrees of scumbags in any financial market. Look at Grant Cardone. That guy is a complete piece of shit, and people follow him like he's the real estate messiah. It is what it is, man. Yeah. Oh God, there's just so many creeps. God. Anyway, so let's talk a little bit. We're going to do our next kind of 15 minutes are going to be talking about taking our currency units, which is a subject that Brandon and I kind of talk about. This is the way I look at it, is taking my little currency units and converting them from income that I've generated somewhere through investment or otherwise, and turning them into employees through, again, proper investing, good consideration of like basic principles of game theory, finance, and the effects of compound interest, which I don't think people always take into account and realize how powerful that can be over just a few years. When your time horizon is a little bit further out, you can make so much money. Like, oh my God, I'll tell you this, earning money, because even when I was in the gold business, I made good money, but it was like every day was miserable. It was Groundhog Day. Luckily, I was surrounded by really cool people, but it was miserable. You're never winning. You're just barely ahead. It's a very low margin, high volume. Like you've got to get it perfect. And if you ever have a bad day, you just get, anyway. So you just do all that work. Many of you work to make all this currency units. And then you need to make those units they need to be your employees, right? So you need an understanding of so basically you need basic finance, you need game theory, basic investment understanding, compound interest understanding. You need to know the different investment vehicles you can play with, risk and return structures, behavioral economics. You need to have a long game mentality. And, think of investing as hiring your money to go to work for you, right? So we're going to go into that a little bit more detail. So the core of basic finance is understanding how does money work, right? How do currency units float through an economy? What are the gears, right? The little gears, the gears in the watch. I always joke that like most hedge fund managers right now just look at the watch and they're just perplexed by it because they don't actually understand how the gears work. Bankers certainly don't. Even at a really scary high level, they don't understand how money works. So you need to have a good understanding of basic finance. You need to understand earning, saving, investing, and spending. And you also need to look at that behavior in society. You need to be able to look at on the aggregate, the average earner's earnings, their average person, the average American savings, or whatever, wherever you live or whatever market you're in. The average investment of the average person, the average spending of the average person. So you can see the economy on the aggregate. Before investing, you need to grasp the idea of the opportunity cost, right? Losing it or gaining it from, game theory, which in this context means the potential benefits of an individual, of an investor, or a business. So as an example, I was negotiating for this house and I told these people, I said, it's a not inexpensive house. I'm not going to say what it costs, but I said, you guys are paying minimum $30,000 to $45,000 a month on debt service. The builders are, just based on what they borrowed to build the house. And there's investors behind that and lawyers and all this kind of bull crap. But I said, so you're losing by not negotiating with me, or at least in good faith. You're losing let's call it $40K a month. All right. You're losing $10,000 a week. You're lighting $10,000 a week on fire. Here, gone. And they're like, no, we put our money up. It's all cash. I'm like, okay, but you have an opportunity cost because that cash could be earning 5% in Fed funds or in a money market or in CDs locked up or wherever you decide, short-term on the run treasuries, whatever. You could still be earning 5%. So let's cut that number in half. Okay, fine. So you're only losing $20,000 a month. You're lighting $20,000 a month on fire. Period, full stop. So there's an opportunity cost, whether it's in the form of debt service, which I think it is, or whether it's that money's not doing other things. If you have an X amount house or product or business that you're trying to sell, if it's not making money, you're losing money. There is only income, expenses, assets, liabilities, and whatever's left is your cash flow. If it's not making money, you're losing the opportunity cost of having made that money and been able to invest it. And right now, the minimum of that is 5%. Minimum. Anyway, so this has been part of this ridiculous, continuous, perpetual, bullshitty nightmare of trying to buy something. Anyway, game theory and investing. So let's talk for a second. Game theory provides us with our framework for making decisions in the face of, understanding the interdependence, right? SIPG. Everybody put it, SIPG, the strategic interdependence or kind of interrelatedness between players in a game. There is uncertainty. We try to quell the uncertainty by understanding the rules in a system. And if we understand the rules in a system, then we can understand the payoffs or the reward function. And then we can make some really good assumptions based on that. Charlie Munger, you show me the incentives, I'll show you the outcomes. We want to be able to look at a system, look at the incentive structure, right? In our minds, apply this and create kind of a payoff matrix of different investment strategies. Look at what the Nash equilibrium would be in these market interactions. And then we want to maximize our own personal strategy so that we can minimize our losses and so that our little monies can become little employees. Yes, Grant nails it. Howard nails it. The strategic interactions or interdependencies between players in a game. We assume that players are rational. And because the ones that aren't irrational, there's no point trying to assume that. Okay. Let's talk compound interest for a second, because I think this gets missed a lot. It's often referred to as earning interest on interest. And this one concept can exponentially increase your money units and pass you into that wealth category. And it's where the accumulated interest is added back to the principal sum, and that creates an ever growing sum, so that interest is earned on top of interest, on top of interest, on top of interest. And yes, that rule of 72 with some competent currency management. I always keep just a chunk of stable coin, just earning interest, but just managing the concept of compound interest, getting paid to wait. That is incredibly valuable. You hope that would outperform inflation. And as long as you're taking your interest and you're getting interest on your interest and interest on your interest on your interest, then you get so big that you necessarily grow past the speed of inflation. Hopefully you don't live in Venezuela, Weimar Republic, Germany, Zimbabwe, go down the list. But anyway, okay, investment vehicles. Utilizing game theory terms, you can think of different investment vehicles as different strategies in a game. When you reduce all of it to a game, it also takes a lot of the stress out of it. It takes a lot of the emotion out of it, because you can just reduce things to numbers. I like numbers because numbers don't text you at 3 a.m. with weird dreams and shit. Anyway, the dominant strategy, right? One that provides the highest payoff, irrespective of what others do, is like investing in a diversified portfolio. The Nash equilibrium is where everyone's doing the best thing they can do, and there's no other decision they can make that would be better for them. What we're seeing right now between the DEXs and the OTC is we're seeing people making a flawed dominant strategy. The Nash equilibrium is, if you're going to sell, you go to the OTC because you don't lose money. People would rather, oddly enough, irrationally, lose money on a DEX. It's crazy, but that's what people do. We're not seeing, we're we're seeing a lack of rationality, which is cool. You can also make money in that. Anyway, risk and return. In game theory, because I equate everything to game theory, the concept of risk can be associated with playing a mixed strategy. Okay. And this is where you diversify your investments to spread out your risk. We're all doing this to an extent. We're not all in one asset. Well, most of us are not all in one asset. So in a situation where you have this mixed strategy, a little bit of this, a little bit of that, the return on investment would be the payoff of all those individual mixed investments, right? That diversification strategy. So let's talk behavioral economics for a second. Investors like us need to understand how our own biases, cognitive biases, and the biases of other market participants can affect market behavior and thus, the various investment outcomes. And this is where game theory's analysis of how people actually play games intersects with economic modeling. If that makes sense. Okay, we are long game players, right? So we are viewing all of these investments through the lens of an iterated game. Does that make sense? Where the outcome of current decisions affects future payoffs, but there's no one big payoff. There's many little payoffs over time. DCA in, DCA out. And this is reinforcing the importance of longer term strategies, what you would call an infinite goal versus a finite goal. Finite goal is like, what can I do right now for today or tomorrow? Infinite goal is what can I do over time? Yeah, there we go. And then investing, the concept of like having your money go to work for you, right? So by investing wisely, by understanding compound interest in game theory and cognitive bias, you're essentially hiring your money to go to work for you in the same way like a company hires its employees. You might interview it. You're like, hey, money, how you doing? Tell me about yourself. Well, I'm a US Eurodollar. Wait a minute. So you were issued by a bank outside the United States. You're a call on dollars, but there's no actual dollar. You're a dollar denominated debt with no dollars behind it? Well, yes. I'm not super interested in you. Why not? You're not a real dollar. Go be a Eurodollar. Anyway, you interview your currency units, like in your crypto portfolio, and you decide, are you going to be a producer? Are you going to work on the factory floor? Are you going to have some good outputs for me, man? Anyway, these are your employees. So, let's go. I'm going to dig into a few of these things a little bit deeper, but basically that's the background. So this intersection of game theory and personal finance, it's really that all of your decision-making through just like a panoply of like fields sits on top of game theory. You don't have to be this way. It's just the way I am. It's worked out, but everybody's going to have like some percentage of this, right? But imagine each of your currency units as little workers. Imagine your currency as a whole staff, and your goal is to employ them as effective as possible. Now, basic finance will tell you that we have to balance income and expenditures while aiming for savings, right? Basic finance, income, expenses, assets, liabilities, cash flow, right? Game theory adds a layer of strategic decision-making to this, okay? So to apply game theory to investing, you have to consider the types of games that your currency units might be playing. Basically, the types of jobs your currency units might be involved in. Zero-sum games, non-zero-sum games. Zero-sum games is easy. The stock market's not a zero-sum game. Crypto is not a zero-sum game, right? A football game is a zero-sum game. You have a loser and a winner. You can't have both. The stock market is not that. One investor's gain does not necessarily mean someone else loses. In crypto, if I'm selling, it doesn't mean the other person's losing. And if I'm selling, it doesn't mean I'm losing. Everybody's like, why are you selling? Who cares? You don't have any intention. It's okay to sell when you want to, but if anybody else does it, they're an asshole and they don't believe in the project. No, everybody's position is different. Everybody's background is different. Everybody's needs, necessities, and desires is different. It's okay for people to sell in the same way that it's okay for people to buy, right? You can't get mad when the price goes down because someone sold, unless you get mad when the price goes up because someone bought. It's no difference, right? Somebody's exit is someone else's entrance. Makes no difference. But you do need to understand that those buys and sells are not zero sum. Investment scenarios are non-zero sum games, meaning through whether it's mutual funds or stocks or real estate or crypto assets or whatever, all of the participants can benefit from greater market growth. That's why we care more about this days to green idea, that when are we going to be back in a bullish market, rather than what's the price of this asset this moment. The high tide lifts all the boats, right? So anyway, understanding compound interest on top of that. So as long as you can identify zero-sum games and non-zero-sum games, understand that you want to be a part of a non-zero-sum game. You want to have a mixed strategy, some diversification. Understand that, like, I think Albert Einstein referred to compound interest, like many of you have said in the chat, the eighth wonder, right? Howard said that. And it works on the principle of reinvestment of earnings. So if your employees are earning 5%, which mine are right now, I have some employees over at Coinbase earning 5%. You're earning 5% not just on your principal, but also on the previous year's earnings. So you keep extrapolating that out, right? And like, I'm just going to say, like, on $1 million, you earn $50,000 a year. On $2 million, think about this for a second. On $2 million, you're earning $100K. That's a pretty damn good income. That's a damn good living. 100,000, unless you live in LA, which is the poverty line, but anywhere else, pretty much, other than New York, that's great. So, like, just think about that power. And then the next year, if you don't spend all the 100K, now you have 2 point and change. If you don't spend any of it, if you're in the fortunate position where you don't need that money to live, now you're earning 5% on 2.1 million, and then 5% on 2.25 million, and then, right? So you want to choose the right investment vehicles, right? Diversify your portfolio to some extent so that you're not all aped into one project. But again, I'm not telling you that that's also not a good scenario, because many people are going to make it through just accidentally having picked one asset. Chamath Palihapitiya, he only had Bitcoin. He had it when it's cheap. He had no idea it had value. He's driving a flipping Uber, and all of a sudden he's rich guy telling people about SPACs. Why? Because he had about $200 worth of Bitcoin early. That's it. You guys realize that, right? He's not some super genius. He's not a genius investor. He had an extra $200 when Bitcoin was like a few pennies. Good for him. That sometimes it works out that way, but that's not the rule. That's the exception. Those are outliers. Those, we have to work for it, right? So diversify into, I mean, you could diversify across classes too, right? You could have some crypto, you could have some stocks, some bonds, some mutual funds, some real estate. You could have a little business here or there. Look, we have our car business on the side. That's kind of cool. I'm mostly in crypto, and I'm in sectors in crypto, but mostly crypto. And then we have an airplane, but not much. I'm not super diversified. I'm not like all over the spectrum. Maybe in the future I would be, I don't know, but you've got to be diversified, have that mixed strategy enough for yourself that where you can sleep at night. Think about risk return and your Nash equilibriums. And again, I keep pushing this term of Nash equilibrium because it's important, but in the investment game, balancing risk and the return that's likely from that risk is very important. And you have to do that as just a human to not go crazy at night, right? To not panic and stress out. You don't want to do, if you do all this with stress and misery, like what's the point? You're negating all of the joy you might get from having experienced gains. But the Nash equilibrium in this context is the point where your investment strategy provides a satisfactory return for the level of risk that you're willing to accept. Does the score equal the stretch, right? Anyway, behavioral economics and market psychology point us in the direction of thinking about investor behavior. And so most of this investor behavior, whether it's our own or what we're seeing, is what's expected in kind of traditional financial theory. But traditional financial theory doesn't really factor in a lot of cognitive bias. It does try to factor in some basic game theory, but kind of old school financial theory is too simple and it's weak. You want to have an understanding of macroeconomics, how the big gears turn, microeconomics, supply and demand side economics, little e, Then you layer on cognitive bias among market participants. You think about emotional reactions, like both yours and other people's. And this gives you a huge edge in front running the market. Does that make sense? And then be a long game thinker. And this is just investing in this iterative strategy, iterative games, right? What is iterative for us? Dollar cost averaging, right? Buying and selling, 10x take 20, 2x take 10, these kinds of strategies. Looking for some level of diversification that you hold to when the markets are quiet and that you pilfer when the markets are going up, right? Consistently investing, consistently rebalancing, staying informed about market conditions, doing your 5 T's, looking at the amorph infinite game, right? Investing is, and just like wealth generation and getting rich, whatever you want to call it, it is over iterations. It is an iterated game. Compounding your currency units, your workers, your employees' productivity, make each of those currency units more productive. So if you transform your income in your mind into a workforce of currency units, you want to be strategic because you want to manage all of those employees successfully, right? You want to manage them in a way where they're going to do the best for you, best for themselves. So this is a kind of game theoretical scenario. And so if you understand how money works, macro and micro economics, if you understand how the other players might act, how they're affected by cognitive bias, where to best allocate your currency units, how to mitigate emotional risk. So, that's really all it is. If you do good research, you're really just mitigating emotional risk because you've hopefully been thoughtful about how you invest. That makes sense? So you don't stress about it. If a project blows up, it blows up. So what? It's not going to nuke your portfolio unless that's the only project you have. If you do all of this while you keep an eye on the compounding nature of your investments, you're going to have you're going to be much more likely to have a very good outcome. And you can strategically employ your currency units, your little worker bees in the financial markets. You can maximize the potential of your little workers and you can let them work for you. And then you can quit doing what you have to do and start doing more of what you want to do. So make your currency units your employees. It's very valuable. Let me see if we can get a live thing of how many likes did we get. We hit our 90. We hit our 90. Oh, 82. 82. Just 82 likes. I guess the universe has spoken. Anyway, we'll see you tomorrow. Stay in school. Don't do drugs. Don't do anything. You're poor, insolvent, drunk, or my poor, insolvent, drunk, struggling on meth grandmother, or Brandon, who's probably getting a free tan in the Mexico right now. Wouldn't do. Again, go slow. Don't get caught up in the ups, the downs, the sideways, the corrections, don't get caught up in all that. Stay consistent and vigilant in your self-education. Don't get emotional. None of this stuff matters, man. Can't take this shit with you unless by memorizing your passphrase to your hardware wallet, you can take it with you. That'd be interesting, wouldn't it? You die and then you wake up, but you remember your 12 or your 24 word passphrase. And they're like, did you remember your passphrase for your crypto? And you're like, yeah, actually. They're like, cool. Just input it right here. You're like, why? They're like, well, it turns out you can take it with you. Ah, shit. If I'd only known that. So yeah, maybe start memorizing that passphrase. I don't know. Really deep there. Really deep.
Are you tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university-level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, Reach out at nickblacknext.com.